We said we had a lot more fun when we were 20 than when we were a company of 200. So what do we need to do to stay small, yet still facilitate building this sort of large, ambitious software company? I hear so much from founders and business people bemoaning that hiring is so hard and this, that, and the other thing. And I have a really strong opinion that it's not. I think the difference is people do not put the effort into hiring that they put into sales or product development or these other areas of the business. It's kind of this thing that is done passively. And if you want to drive real efficiency, you need to treat hiring as a priority 1A. I think as it pertains to startups, you need to have an honest conversation about what you're actually building, whether you know there's a market for it. I see this with our customer base is largely early stage startups all the time. And I see this constantly with they've worked on something for 6 months or a year or 2 or 3 years, and it's not going where they want it to go. And they are not honestly assessing why that is.
Presented by Zapier, the AI automation company.
Hello and welcome to the Small Team, Big Scale podcast, the show where we talk about how tiny teams with big ambitions are doing more with less, scaling smarter, not harder, and building big businesses with teams that could fit around a dinner table. I'm your host, Ron Schmelzer, and on today's episode, we're talking with Geoff Roberts, who's the co-founder of Outseta, about how a team of just 5 people working about 4 to 5 days a week with a part-time additional person doing some mid stuff just a few hours per month built a profitable 7-figure business serving over 1,000 SaaS companies, all without taking a dollar of outside funding and not wanting to, and while building a structure for their company that is really eye-opening and, well, pretty amazing in my opinion. So, hi, Geoff. Thank you so much for joining us on the Small Team, Big Scale podcast.
Ron, appreciate you having me. Great to be here.
Yes, it's fantastic. And for those that don't know about us, I'll give you a little quick intro, but then I'm going to have Geoff tell us a little more about how they got started and how we got to this point. But for those that don't know Outseta, it's a platform that integrates all of the core tools that are required to build a SaaS and membership business: payments, authentication, CRM, and email tools. And I'm sure there's more in the pipeline. Geoff has been bootstrapping the business for almost a decade, and despite the supposed SaaS apocalypse, he has no intention of stopping anytime soon. Outseta operates using an unusual organizational model where every full-time role pays a standard $210,000 salary with the same equity rate as the founders, and people can choose to work within the company anywhere between 1 to 5 days per week, and 50% of the profits go into a profit-sharing pool. The structure is specifically designed to keep the team as small as possible, enabling a small team to build a particularly ambitious software product over a 15-year period. Now you can see why Geoff is the ideal person for this podcast. And he's written a recent article I'm going to link to in the show notes called Growth by Elimination, where he lays out how Outseta has grown by eliminating everything from investors and management to sales, budgets, and forecasts. I know some of the stuff may drive people crazy. They're like, how can you do this? But it's clearly working. And all of this is to stay laser focused on the 4 things that matter most. And we'll talk about that. So in his 7-year update, he revealed that Outseta grew its revenue 70% year over year, driven not by new customer acquisition, but by existing customers growing and organically moving through the pricing tier. So, Geoff, I can keep going into it, but bring our audience up to speed. How did you get here to this point? And what's driving you to build this kind of business?
Good questions and a lot to unpack there. So going back to the origin story of Outseta, set the stage for a lot of this. So it was spun out of another company that was called Buildium, which had a very typical journey for a SaaS business that did well. The company raised venture funding, grew to a large scale. The headcount of the team was inflated, and it was a great outcome and a good experience. It's where I was lucky to start my career. But when we went looking to do something next, we had a product idea coming from Buildium, and 2, an idea of how we want to run the company and what we wanted to do differently. So the product idea very directly came from my own experience. In the context of a SaaS business, I'm a business user who was like, we're off now. We need to get Salesforce, and we need HubSpot for marketing automation, and we need for billing, and we need Zendesk for support, and Chartable for reporting. And we stitched together these third-party software tools, as all SaaS companies for the most part do. And we got back and scratched our heads and said, what? All these SaaS businesses need the same tooling. Nobody has delivered them in a single platform, particularly for early stage businesses that have less complexity. There's opportunity to bring all this stuff together in an integrated form. And the analogy that we used for the product, we want to build Shopify for SaaS. Shopify made it easy to start an e-commerce store and to make it easy to start a SaaS business. So it was very much scratching your own situation that led to the product vision. Then we said, okay, we just worked on this other startup for quite a long time. What would we do differently? And number one thing we came up with amongst our founding team was we said, we had a lot more fun when we were a company of 20 than when we were a company of 200. So what do we need to do to stay small, yet still facilitate building this sort of large, ambitious software company? And it came down to, we needed to attract this number of very talented and extremely committed employees. And then we said, okay, how do we do that? And our entire compensation model, equity agreement, and all these things we're going to discuss fell out of that. So that's the short version on where both the product and the structure that we're discussed came from.
Yeah, I think it's really interesting because I think when people start a company, they think about what is usually the two alternatives, which is I'm going to bootstrap something, it'll be small. Usually they're sort of consulting firms or small software companies, and they kind of figure that there's some limit that they have to growth. Obviously, if you're doing services consulting, you're limited by your time and your resources. If you're bootstrapping a software business, sometimes maybe you're undercharging for your product, usually is the problem. Sure. And then the alternative is like, oh, well, I got to raise, $1 bajillion and find huge markets and try to dominate. And, now it's like this battle and I'm constantly raising money. But like we're starting to see there is this third way, which is, wait a second, you can build a scalable, sustainable business without raising money, without the limits. And I think part of this is this whole idea of niches, which is there are niches that can support $10 million businesses, $20 million. So as you're looking at this, I know you're kind of eschewing the whole forecasting and planning thing, but how are you thinking about in terms of growth? Are you just going to say, let's just let this grow as big as it can? Or is it, there's like place that you want to be with the company?
Yeah, I would like it to grow as fast as it can, to be honest with you. We are not willing to sacrifice control in the way that we want to run the business and the benefits we want to get from the business that way to get there. I'm sure if we went out and raised $50 million tomorrow, we could deploy that $50 million and grow faster. We would lose control over our decision making. We would have all the strings that come with venture capital. And that's just something we deliberately decided that we don't want to do. To your point about this being a two-way door, either bootstrap and think small or raise VC funding and think big, I think there is a third dimension we really thought about and leaned into early on that is popular with most people, to be frank. But the third dimension worth mentioning there is time. We definitely set out saying we want to build this into a large, successful business. We're going to do it with the constraints of bootstrapping. But what that means is we're going to have to work on this over an extended period of time. And we really said at the outset, we are looking for an idea that is big enough, significant enough, and durable enough, most importantly, that we can work on this for 15 years and it's going to be relevant. And when you look at what we offer, it's payments, it's authentication, it's CRM, it's email. These things have been around forever, going to be around forever. Certainly the feature sets might change a little bit as technology comes and goes. But these are things that are going to be needed long into the future. So we were very comfortable saying, okay, we're going to commit 15 years to this. We think this is still going to be relevant 15 years later.
So I'm curious. So when you started, was it just you, or I forget if it was like you and a co-founder? And then how are you deciding when you need to have an additional person there?
Sure.
More than just sort of the contracting and temporary help. Mm-hmm.
So it was myself and two co-founders. We started together because we had very complementary skill sets. In short, I was a marketer. There was a front end developer and a back end developer, so we needed to bring the product to market and market it. From there, the mindset has really been we hire completely as last resort. We only hire when things are really breaking down and it's become untenable for the existing team to continue to do the things that we need to do and support the product well and support the customers well and whatnot. But mindset throughout the last 10 years has always been, okay, we have some problem in terms of scalability. How do we solve it without an additional person? And yes, things like AI now and automation tools and those things have been part of the solution. But I would say a much bigger part of the solution has been just not doing a lot of the things that a typical business does.
Yeah, it's sort of the martial arts theory. It's like, the most powerful move is just to avoid shift the energy. Don't go right into it with your full force. That's usually a good way of hurting yourself. So this is really good insights. And I think, part of this is that, as you're starting to grow, one of the things I know I read in your blogs is that you had other ways of covering your personal costs. People think about starting a company and they need income. Part of it is they need income because they want to feel like the business is doing something, it's generating revenue. But a lot of times they need income to support their way of living. And I think it's an interesting thing because even for you, you weren't 100% in Outseta from the beginning, et cetera, right?
Sure. I've been all in time-wise for quite a while now, close to 5 years. But it took, I think, 4 or 5 years for me to get to that point where I was working on Outseta full-time. And that's, one of the downsides of bootstrapping. And our early years were particularly lean. People think I'm crazy when I say this, but it took us something almost 3 years to get to a few $1,000s in MRR. So there were years where we worked on this thing without any significant revenue. And that meant that I had to do other consulting work, other advising work, other stuff to pay my bills and juggle jobs. And as Outseta's revenue grew over time, my commitment to it and my salary from it and all of that grew alongside it. But we, as opposed to taking the shortcut that raising funding can provide, we said we're going to be miserable until we get to the point where this thing is self-sustaining.
Yeah, I think it's actually kind of a healthy way of looking at things, especially since employment as a whole is in the midst of a pretty substantial change. Sure. It's not just the fact that companies like yourself can exist now and build and grow significantly, even if it does take time. But I've had some interesting conversations where people said, like, well, what is the safer choice now, working for someone or working for yourself? Sure. And I'm like, it's not so clear anymore that working for someone is a safe choice anymore. There are issues of having enough support in terms of benefits and healthcare and stuff like that. Sure. That's a societal thing. But it's interesting that so it sounds like you found other people. Not only you found other people to help you, but you found other people with that same mindset, which I think is just as important because I've worked with other people who felt like they needed the full-time employment from a psychological safety perspective. I don't know what your thought is on that. Yeah.
Yeah, I think a huge thing for us, and the reason we have shared as transparently as we have with everything, and we've published our compensation model and made all of this very public, people often think it's some marketing thing. It's not a marketing thing. No one buys our software because we have open salaries or whatnot. It is I would call it a self-selection thing. By putting this out there into the world and explaining, we work this way, here's why, people self-select in or out of it. There are certainly people that have looked at our way of operating and our compensation model and all of that who have said, I'm a software engineer. I could go to Facebook and make $500,000 a year. Why would I work with you in this way? And that's totally fine. Those people are not going to want to be at Outseta. That's not going to be the environment that they are looking for. But we've had other people, all of the engineers on our team today could go elsewhere and make significantly more money if that's what they wanted to do. But they have said, want to work in this way. We like the flexibility of working this way. We like the ridiculously high amount of ownership that we're given in this business for working this way. And they self-select in. And I think that's really what it's all about.
Yeah. I was going to ask about this later, but this is a good pivot time to talk about the ownership model because you have a very interesting equity model, which is based earned on a day-by-day basis in many ways. So I mean, I read the blog post, I'll share it, but maybe you want to explain a little bit about how that works and also the trade-off between compensated work time versus in terms of money compensated work time versus equity compensated work time, and kind of how that works. That's, I think, the first time I've seen a formula like that. How you came up with it, whether it was based on something else. I know there's like 16 questions in there.
So it all goes back to this desire to stay small and attract really loyal employees who want to be here for the long term. And we just started by saying, okay, how do we do that? And the first thing we did is we're trying to hire pretty senior experienced people. There needs to be a good salary. There's nothing magic about $210,000 per year. As I mentioned, there's certainly opportunity to make more than that. But we think that's a pretty healthy, well-paid salary that would attract good people. So we started there, and we said, okay, we can envision instances where we have an opportunity to work with a really talented person. They have their own entrepreneurial projects and maybe don't work on Outseta full time. Let's create a structure where they can come and work at Outseta part if they want to. So we said, you can work 1 to 5 days per week, and it's still going to be based on that same $210,000 a year salary. So if you work a week, it's $42,000 a year. If you work 2 days a week, it's $84,000 a year. 3 days a week, 1.6, all the way up to the 210. So then we had our model to attract talented people as well. And then we said, particularly in our early years, although we're an early stage bootstrap company, we don't have the money to go out and pay $210,000 a year immediately. How do we get some of these really talented people on anyways and make sure that they're committed and they want to be long term? And we said, let's give them just as the founders would earn equity. So we give everybody the ability to choose how many days per week they want to work for cash compensation. And they can also choose how many days they want to work for equity compensation. The equity compensation model is super. If across all of our employees, 100 days have been worked for equity, and I have worked 15 days for equity, I own 15% of the company. It's really that simple. So as an example, today I work on Outseta 5 days. I am paid cash compensation 4 days per week, and I earn equity 1 day per week. And everybody chooses what works best for them.
Yeah, was that based on anything, or you just sort of kind of came up with the formula and you put together that structure independently?
Yeah, we pretty much did it independently. I mean, we definitely looked at other software companies and how it solved for equity arrangements in the context of early stage businesses and whatnot. And we wanted to do something like this. It also certainly comes from a place of, you don't need me to tell you, in the case of most companies, even those that have big exits, it's investors and the founders that make out like bandits. And in most instances, even with pretty successful exits, it's not super meaningful employees. And there's a reason for that. The investors put in money and the founders put in time that the other employees don't. But we want to create an environment where if this thing does do well, and if we do win, the rewards are shared a bit more than they typically would be a more traditional structure.
Yeah. In addition to that, you have a profit sharing plan. So that's interesting as well. So it's not just sharing in ownership benefits, which you generally realize, as you mentioned, on some sort of liquidation or exit event. But the profit you can realize much sooner than that, if and when there's profits, right? So you can talk a little about that. Yeah.
So that came from a place of exactly as you mentioned. Equity is always speculative. First of all, we went into this saying we're going to work on this for 15 years. This was not going into this trying to exit quickly. So how did equity become meaningful or have value? Is it ever? That's an open question. Also, with the same salaries for everybody, then there's a question of, okay, how do you motivate people? If somebody is paid the $210 a year salary, what's motivating to continue to work harder and do better and push the company forward, and all these things that are super important for any business. And we said it should be profit sharing. The profit sharing gives you upside beyond the salary that is paid out yearly. It gives everybody opportunity to adopt the mindset of to keep this team small, because if we keep this team small, there's profits. We need to squeeze efficiency out of this wherever we can so that we are making more profits. And everybody gets to participate in meaningfully.
Well, that's fantastic. So let's get into the business itself. I think it's kind of what I find really interesting about the business, besides the fact that, hey, I have a community, I have a SaaS company. So I understand the value proposition very clearly. But it's interesting how the product is in some ways, you might not have thought of it, a reflection of the business itself. Because
Very
the
much
idea
so.
is that the product is like this leverage engine, right? It's one platform that replaces 3 or 4 separate tools. So what has gone into the product, but how you even think, we talked about how you think about expanding the team. Now I can talk about how do you think about expanding the product? And how do you think about that in terms of, do you stay focused in the market and expand customer base, or do you expand functionality wise? Because things are definitely getting more challenging in this world where building things is getting easier and easier for everybody.
For sure. Yeah, I think the popular mindset in SaaS for a long time, and rightfully so, I totally understand where it's come, has been pick one problem and go super deep. So build the best email marketing, build the best CRM, build the best payment system. We from the get-go did the opposite, and we've been pretty for that for a long time. And I would go so far as to say we chose the much smaller market opportunity. I think most SaaS founders, because they are tech, because they love software, because they have the ability to create tools and know how to do that, have by default said, we're going to go out and buy all of the software tools and build the best we can and take the time to stitch all together. Even if they can sit there and nod and say that not the best use of my time, they do it. And we said, that's fine. We recognize that the market who wants this integrated solution might not be as large, but we realized very early on there is a market for it. There is people who are like, I am tired of integrating all these tools, or I don't know how to integrate all these tools, or my zaps are all breaking. If you can give me the basic stuff that I need and it just all works together, that's super attractive. And that is primarily who we serve today. Where we came up with real estate that we chose to compete over, the category set we chose to build, we just looked at SaaS business and we said, what are the tools that they need that are non-negotiable? And we came up with payments, authentication, CRM, email, help desk. Pretty much every SaaS business out there uses tools to some degree. And we said, that's what we're going to build. And we haven't wavered from that in 10 years. That's exactly what the product is today. I don't think we have much vision of going beyond that, to be honest with you. Like, this is the feature set. The challenge for us has always been, how do we make that feature set good as possible and approach on feature parity with the point solutions that we're competing against? And we don't have true feature parity, but that is part of the story. For everything that we offer, we're trying to offer the 80% of the feature set that delivers, 98% of the value, and we don't have a few whistles that the more specialized tools do have.
Yeah, makes sense. And I'm interested in this, like, when you think about your customer, like, who is your customer, both in terms of like the kind of company or the kind of person, and then also like the role within that organization, maybe like how technical they are or non-technical they are as a customer.
Yeah, this has been the most interesting part of Outseta's journey. We started out in 2016 focusing on developers exclusively, SaaS businesses exclusively, and that was our target customer. And we sort of learned that we were fighting an uphill battle for the reasons I just mentioned. Developers are demanding in terms of the tools that they use. We didn't have feature parity with the tools we're competing against. They have the ability to integrate all this stuff. So we realized we were fighting a tough battle. About 4 years in, the no-code world bloomed thanks to companies Webflow. And we recognized that there was an opportunity to point Outseta towards these less technical founders who needed all the same tooling, but didn't have the same technical skill set. And really what kicked the business to high gear and helped us start to grow in a really significant way. And then as the product continued to develop and mature, we saw developers come running back. And developers that use Outseta today tend to be people who have built SaaS products before. They're looking for speed to market. They see us as an opportunity to get products out the door much more quickly. They have also lived through the challenges of integrating all different tools, and they're just like, listen, we're builders. We want to focus on building software. not instrument our tech stack. So that tends to be the persona of the developer that uses Outseta today. Customer base is very much split. We have very non-technical, we have very technical people. And that's a challenge for us as a business. You need to build product that is usable by both groups. We need to have documentation that makes sense for both groups. And frankly, I don't know. I've always wondered, like, do we have this right in serving both audiences or not? And when I've had that discussion, people are like, you need to go look at your most notable customers and what do they look like? How much of your customer base do they make up? Our customer base is really evenly split 50 down the middle. So we have continued to serve both audiences.
Well, that's a really good point. We've had some really interesting conversations with a few people that have really some of them have figured it out. So this is the ICP, right? The ideal customer profile. And I mentioned already Dado CMS, which is that small company that just built a headless CMS. And they realized really that their big customer were agencies, like web agencies, and who could spin up websites in like 2 seconds by, doing a CLI thing, which is what they have. But there are other companies. We've talked to Gina Bianchini, who is the CEO of Mighty Networks. We've talked to Wade Foster, CEO of Zapier. We've had all these people on our podcast, Fabian Veit, CEO of Make, and Emmanuel Strashnov, who's the CEO of Bubble. And what they've all realized is sort of like that growth is never like straight curve, whether it's linear or quadratic or exponential. It's like step function. It's like, and Max Kang, who built like a $10 million business selling sticker books on Amazon. It's a crazy story. It's just like him and 2 or 3 other people. It's just the weirdest story. It's here on the podcast to listen to. But a lot of them have realized that a lot of it comes down to like really narrowing down and finding that one ideal customer, and then finding 2 people that are like that and expanding from there. And then it's not being all things to all people, but it is about trying to be as much as possible to that one person. So I think that's really good insight. And it sounds like you're getting to that inflection point yourself.
Yes, I would say we have been on a constant journey of looking for that person and thinking through, do we have a customer that we feel like deserves that level of focus? I think we are closer than we've ever been to having an opinion on that. But to be fair, we have not made the decision to focus on one particular use case completely.
Well, I can guarantee that as you do it, we will be reading about it on your blog. And I think that's sort of the next little question here, which has to do with this really great approach. I love companies that build in public. That's how I found you and how I found some of these other companies, because I saw that's actually, I found Dado CMS. They posted something on Hacker News and I'm like, okay, I gotta dig into this. So tell me a little bit about this, because it is a philosophical, you have a lot of things that come from this, having a particular point of view, right? Sure. The point of view on how you start a company, a point of view on the kind of products and how you decide on functionality. But you also have a point of view on transparency, which is the blog posts, the talks, the revenue numbers. So tell me a little bit about that. Like, what is that mindset like? I think you mentioned that it's not about driving customer acquisition, but tell me what drives all of that and how you keep that going. Yeah.
Yeah, it's not about driving customer acquisition, but I would say an important caveat is, in our case, our audience is other founders of early stage companies and other entrepreneurial people. Our audience is myself, essentially. I'm the persona that we sell to. So when we are transparent and when we do share these things, it is of interest to people that our product might be of interest to, and we do get customers. We do get customers from it, although we don't think of it as we're doing this for the sake of customer acquisition. For the most part, I do it because I do think it builds trust. It is a way to get brand awareness out there and for people to come to know me and the other people on our team and how we think. And there's so much in tech around how fast companies grow and this, that, and the other thing. I think by being able to point people towards essentially a 10-year diary of us building our business, it helps us come across as credible and build trust and attract the types of people that we want to attract. So that's really the reason to do it.
Yeah. Yeah, and I think there's a lot of that, like that in many different industries where people are just like, join me for the journey, join me for the ride. You end up attracting the people that are attracted to that, which is fantastic. And
Yeah,
especially when you're not trying to build a $1 billion company, you're trying to build a 10, 20, 30. I'm sure you'd be happy with a
sure.
$50 million company or a $100 million company.
100%.
There's definitely markets for that. There's definitely an audience for that. I think it's, in my mind, easier to build a 10, 20, 30, 40, $50 million company than
Yeah,
a $1 billion one, which requires a lot of, winner take all approaches, which are, I would say, not very customer friendly or employee friendly or
yeah.
anything like that. But let's talk a little about the technology base, because you started about 10 years ago. Technology, well, it always keeps moving. Things are really moving super fast here. You mentioned a lot about feature parity and, really thinking about that and what users can do. So how are you thinking about, like, is AI speeding things up for you?
Sure.
How is it accelerating? Is it changing the way your customers think about you and your product? Is it making them think
Yep.
more about, maybe I want a headless experience, an agentic experience, an MCP experience? I'm just curious as to how this is changing your perspectives.
Yeah, I would say there's a few things here, sort of 3 points to hit on. The first one has just been what I would describe as like the emotional impact of AI. So we've worked on this for 10 years. Really, it took us 6 years, maybe even 7 years, to get the business to the point where it was stable. There was a sizable customer base. Everybody was being paid well, et cetera. And we had 2 or 3 years there that were they were stable. They felt good. We're continuing to work on the product. We felt we had reaped the benefits of all of the previous 6 years of work, and like we'd gotten to this point where we had this self-sustaining, wonderful thing. We still very much do, but I would say from a founder perspective, AI has just thrown a wrench into everything in the sense that it's brought in uncertainty. So I certainly view the upside potential of Outseta is probably much higher than I ever did previously now. But I also view the worst case scenario as much higher than it ever has been too. I think the odds that this could go to zero and we could be put out of business are much higher than they were before. And I think the odds of a significantly great financial outcome have gone up as well. So that's the first bit. I don't know which way that's going to shake out. Of course, we're trying to ensure the positive one is how this shakes out. But that has been the difference in feel. The second one is Outseta is this product that integrates with all sorts of different website builders, coding frameworks, et cetera. It's really tech stack agnostic. And the primary difference on that front is now people are trying to integrate Outseta with AI tools. And there's been a whole track of work to say, okay, someone's in Replit or using Cursor or using Claude, and they want to integrate Outseta. What does that look like? How do we change the onboarding experience for the AI builder, so to speak? And we spent a lot of cycles on that at this point. And then there's also this notion of the day-to-day running of a business, and people are looking to build small and mighty teams and have agents do more of the work and work alongside their human counterparts and all of that. This is the thing that I think so far we have really nailed. So up until 12 months ago, this was not something, frankly, we were thinking about. We were building software for an end user who's a human in our user interface. But now we have to think about, okay, all those things that you can do within our user interface, can those be done programmatically via our API, via our MCP server, et cetera? And just this week, really, we've gotten to the point where all of the core actions that you can take as a human user within our software, you can also take via the API, via the MCP server. And with our customer base, as I mentioned, we have this mix of technical and non-technical people. It is still very much the technical folks and the early adopters who have started to use those features, but we have seen them since releasing them really take off. People are leaning into this stuff in a serious way. I think it's going to take a while for our non-technical to kind of catch up and realize what these tools enable. But I feel like we've done a really good job of that, and it's probably the thing we're most proud of this year.
Yeah, that I could tell you that's a huge unlock, because if you think about a lot, people are still love to code and love to code by hand, but people have these accelerated timeframes now. And if I could just go, hey, agent, let's build this SaaS solution. Here's my design document. Here's my PRD document. Go to Outseta. I don't want to, get 15 tools working here. Just go there, MCP my way into it, build me this system. And if I can get up and running in like 4 or 5 hours with something credible, then I can test it. And I can do the hard part, which is getting people to pay attention to what I'm doing. I think it's a huge unlock. Yeah.
This is the thing we are really leaning in as a business. And to be honest, like everyone's like, oh, AI changes everything. This is the exact same problem we started solving for developers back in 2016. It's the exact same problem we solved for no code in 2024. It's just AI now. But if you look at even the AI builder, they are using agents. Yes, they are asking their coding assistant to assemble these tools, but they're still integrating Stripe. They're integrating Clerk for authentication. They're integrating Read for transactional emails. They're still integrating all these point solutions, and AI has made that easier. But if you look at this new breed of AI builder who's this less technical person who isn't a developer themselves, this is the graveyard of AI projects. Activation challenge around knowing integrate those tools and getting them to speak to each other and all of that is where AI projects die. That it can solve that in one prompt instead of to integrate all these different tools. So that is our story from a AI integration perspective.
That's fantastic. Well, as I said, I think it's a big unlock. I think that'll do something quite a bit. So it's a good move. It's better than ignoring it. It's funny, we've had some conversations with some of the more traditional SaaS players. And I actually feel when you're talking about the two outcomes of going bust and going great, I think the going bust is probably very unlikely because as long as you're serving your ICPs and you're giving them what they want and you're, listening to them, I think you're fine. Sure. I'm much more worried about these mega SaaS companies that are basically in the value extraction mode where they're just charging more and more and more for their products, providing less and less access to functionality and features, locking things behind, gateways. And people are saying, what do I need all this for? Like I could just, you're making it so hard. You're motivating me to just build something on my own because I have a point need, I have an itch I want to scratch, or I can go to better, more flexible, cheaper solutions. So I think they have greater risk and outcomes, negative outcomes. But that's probably a whole other conversation for another time. So let's get back into sort of like the vibe here, which is like small companies punching above their weight, because I know I love that. One of the things you've talked a lot about is this idea of life profitability. So this idea of that your work should enable you to live a better life, and that providing that environment to employees creates more loyalty and gets better quality work. So talk a little bit about how that works. Talk a lot about, like how do you build sort of people who feel vested for the long term in the company and its growth? Yeah.
Yeah. The first thing I'd say is just the term life profitability is not mine. It comes from a South African entrepreneur, Adi Pienaar, who wrote a book by that title. You should go read the book if you haven't. It kind of gives language to things I had been thinking of for a long time. So I'm a huge fan, and I that phrase a lot. But the idea of this all came from my experience at the first SaaS company I mentioned called Buildium. I was a young guy when I worked there. It was my first job out of college. And the co-founder of that company is one of the co-founders of Outseta now. So my boss became my co-founder when we started working on this. But they just did a number of things that were incredibly employee-centric that I reaped the benefit from being able to work remotely long before it was popular. They paid off a portion of my student loan fee. They hired me the most incredible coach, marketing coach, rather than hiring over me. Point when the intelligent thing to do to hire over me because the business was exploding. They just did all these things that were really, really and employee centric. And based on that, I saw in myself, I thought of the company as my own. Worked incredibly hard and I was very loyal. It was because of how I was treated. It really stuck with me. And as we started thinking about Outseta and wanting to keep the team small and wanted to have people here learn and all that, I basically said, how do we create this environment where the company is so good to the employee that the employee then wants to be so good to the company because the company is allowing the employee to do all of the things they want to do with their life outside of work. The person that, lives to work to live, much more so, became like fundamental to what we're trying to do with this structure. And it comes down to just small things in terms of how we work. There's no hierarchy at Outseta. Like, I'm a founder, but I'm not anybody's boss. Hire people we possibly can and say the skills that you've got, figure out how to contribute to the team and move us towards our goals. One meeting a week where we try to get everybody there because it's our one time a week to sync up. But other than that, you can work whenever you want. Nobody's after you or expecting you to be online at any certain or anything like that. And all these things just we want to create space for people to live awesome lives. We think if we do that, they're more likely to work hard on behalf of the company. That will actually drive the company's success. So I think so much of the employer-employee relation has traditionally been thought of through the lens of how does the company extract maximum value out of the employee? And we're trying to look through the lens of like how to give the employee everything they want, because if we do that, then they're going to be like, wow, this thing is enabling me in an incredible way, and I'm going to work to make sure this thing endures and does what continues to be able to do that. So it's kind of a flip of the mindset, but to me, that is the most interesting part of entrepreneurship. I've worked in software forever. I'm deeply in the weeds of software related stuff every day, but it's organizational design and how do you grow startups that is really what gets me out of bed.
Yeah, organizational design. When people are reading the blogs, I'm going to link to them. I'm sure one of the questions they're going to have in their mind, because people are used to things like planning and structure of some sort, and I'm sure one of the questions might be, especially when you're working for yourself, it's one thing because it's easy to manage yourself. For some people, actually. Some people maybe not so easy. But when you're working in a group, there's going to always be this thought like, well, how no forecasting and no budgeting, but you obviously do have to think about where you're going to allocate your resources, including your time and your money. So how do you go about within the sort of flat hierarchy structure, trying to figure out like which direction we go? Do we invest in doing a trade show? Do we spend our time and effort pursuing this partnership? Whatever. There's lots of things that kind of get into this mix, which you have to think a little farther ahead. Yeah.
Yeah. There's two things that are fundamental to making this work. The first one is transparency. So it doesn't work at all if all employees don't have access to all the information. So the employees need to know how much profit are we making? What does the bank look like? How much could we possibly spend, because we're bootstrapped and we're limited by the actual cash that we have on hand and all of that. Just being transparent gives people a sense of what's possible. They're looking at all the cards, so to speak. The second part is honestly the equity, because everybody has skin in the game to a much larger extent you typically would. So that just drives misalignment. Everybody shooting themselves in the foot if the company is not successful. So we're all rowing in the same direction because we all have really meaningful skin in the game, that we all agree on what the path forward is, investments we should make and whatnot. Of course not. So in that case, I would say guiding rule today is the person who has expertise or the most expertise in a particular area of the decision. So when it comes to marketing, for example, I am the in-house marketer. When it comes to what we're investing our money in from a marketing perspective, the team looks to me. When it's a decision, look to the senior engineer who are most familiar with our tech stack and that kind of stuff. It's obvious, but it naturally happens in a small team. There's not enough people that there's like the need to aligns and titles and all of that. It happens relatively organically. And then there's also just using a marketing invest as an example, because everyone has all the information. And we don't even have hard and fast rules on this, but to give you an example, if I were to go spend $1,000 to sponsor a new or something like that, I don't have to ask for permission. We have to do that. It's a marketing investment. I'm the person to make that. I just go do it. If I wanted to invest $100,000 in something, that makes a much bigger impact on the company at large. That is something we would get or we would discuss, we would say, this is one of the major investments we're thinking of making as a business. Why should we do this versus some other thing? And it becomes a conversation amongst the team. But day to day, that allows us to operate with a lot of velocity. You're not making these massive investment decisions day to day. So it creates a lot of just operating that way, I think.
Yeah, it's really interesting. It's funny how we're talking about, business and business structure here, but a lot of it's into economic theory and political theory is not a political podcast whatsoever.
Yeah.
I don't want to get into it, but there's a lot of people thinking about the same thing. Things work better in small teams where everybody is aligned. Can we think about that in terms of other structures, in terms of, maybe politics should work that way. Maybe we should work, maybe there's more this demarchy approach. There's lots of thoughts about that. And I think it usually happens every few, 100 and 200 something years when there's a big technological shift. There's often an economic and a political shift as well. And
Sure.
we're heading into that because there are times I feel like we're heading slowly into techno-feudalism here, but where we have large people with large interests who are controlling a lot of decisions. But hey, that is a really big shift in the conversation here. So let's not do that. So let's get a little bit more into where you're at. And then we have our rapid fires I always love to get into. But the thing about this is for other founders who are listening to this podcast, of course, if they're interested in the product, encourage them to take a look at your product and not build those things themselves or do what the challenge. But let's say they want to build an organization like yours. They have a team, maybe 5, 6, 7. They're trying to figure it out. Maybe they have some customers, they have a product that works, but they're doing the grinding thing where they're like 80-hour weeks and you can't figure out how to get off the treadmill. Maybe what's some advice that you might give them to help shift their approach? Maybe some steps they should follow in some order to say, hey, you're doing it this way. You may run into the wall. There's another way. Here's what I encourage you to start thinking about.
Yeah, the way that I think about it is almost any process within a business can optimize to some extent or try to automate or whatever. And most founders are smart enough to recognize that they can do that. However you're doing sales, however you're doing support, however you're doing marketing, you could squeeze some efficiency out of those things. And that certainly helps. And you should certainly do things. Like we do that stuff every day too. We're trying to figure out how to do more work in a scalable way. But I think the big unlock, if you are in that position where everything is a grind, is more so this mindset of what can I just not do? And for us, that has been this pretty long laundry list of stuff. We don't have a dedicated support team. We have everybody contribute a little bit of their time to support. We don't do any sales. It's completely product-led growth. We don't do salary negotiations. That's part of the reason we have this standardized salary. We don't waste time on forecasting and budgeting. We just try to do what we think is the best long-term interest of the business day to day. We don't, put together board decks or investor stuff because we don't have investors, and we said we never will. So all these things are these very explicit decisions that we made, and there's certain trade-offs with all of them. But if you add up the amount of time that typically goes into those things collectively, it is massive. And if we tried to do all of those things with the 5 people that we have at Outseta, we would never be able to do the much more what we deem meaningful work, which is building product, marketing, customer service. So that's where I would start. Challenge every assumption around what it is that you need to do. And some of that you can probably eliminate altogether or outsource or whatever it might be.
Yeah, as a matter of fact, those things I'm thinking about. This goes back to the old Timothy Ferriss and 4-Hour Work Week, where he's like eliminate, automate, outsource. That's what he thinks about. How do you think about the elimination part? You have a great blog post on all of that. How do you think about the outsource part? Like where you're like, okay, well, this has to be done, but this probably shouldn't be done by us. We're going to trade our money for time. When and how do you think about that?
Yeah, a perfect example of that, and not that this is an uncommon example, but it's like our year-end accounting bookkeeping. We've got an accountant, and we give them access to our Stripe, and they go into that. I could do that. My other co-founder could do that. Like, we're familiar with that type of work, but it's just like, this is not core to pushing this business forward. It is not horribly expensive. It's something we can take off our plate and not think about whatsoever. That's an easy decision to outsource.
That makes sense. Okay, great. Well, hey, this is fantastic. I can probably go for hours. You probably will. I think I encourage our listeners to reach out. But we get into our rapid fire. So I was always asked the same three questions for all of our founders, whether they're big team, small team founders within large organizations or small team founders who are just doing their own thing by themselves. So I always ask these same three. The first question has to do with tools. So thinking about yourself and for your own personal, experience, what is one tool or automation that you absolutely can't run your business without? The one that gives you and your team the 10x leverage every single week?
Yeah, that's a good question. I would bring this back to my previous point around not elimination in this case, but just variables that don't change. In this case, it's going to sound self-serving, but I don't mean it specific to Outseta. We started using Outseta from day one in our business as our tech stack, and we have not changed that in 10 years. And I think this is a great example of, I see so many founder friends all the time who, some new customer service tool comes out or a new CRM, or they want to payment providers or whatever. And these become these huge projects internally that take enormous time and effort. And maybe they're after benefit of these new tools. But I think the point here is just consistency and finding a system that works, continuing to use it is underrated. And I don't mean that through the lens of Outseta, whatever your tech stack is. And I think you hear this a lot from developers when it comes to like you can build projects with PHP. PHP has been around forever. It's the same mindset. It's find what works and stick with it. That is probably my biggest advice. I don't have a particular like mind-blowing automation that comes to mind. As I think through that lens, the only example I can give you is a common one these days. We have trained a support agent on our docs and whatnot, and that has sort of become our level 1 support. I would say I was very hesitant to do that. I have been a pretty outspoken proponent, or not proponent, the opposite of these AI-based chat tools. I hate them myself as a customer. I think they create bad customer experiences. So we were very hesitant to do this ourselves. We did implement this. It did make a significant difference for us as a business. And I think that the approach that we took is what I would recommend to other people considering this. If people come to our website and they have a question, they start by asking an AI agent. And if they get a response that answers their question, great. If they don't, immediately route them to a person. And what I think that has taught us, and I think the benefit of these sorts of workflows is it's remarkable how often somebody will get an answer from an AI agent. And if they don't, you can route them appropriately. So that's been a pretty good unlock for us from an automation perspective. But that's all I got.
Yeah, and it's actually becoming, I'm starting to hear more and more of that, which is let the customer choose their own support path. Because there are some things where like, I don't need to talk to someone. I just like, how do I do this? Or I'm having a billing question, or whatever the question is like self-service is good. In some cases, they want self-service, especially if they're dealing with things like cancellation. They don't want to talk to someone. But then there are other things where it's like, I don't want to go through agent hell where the agent's like stupid, and I just want to talk to someone who actually knows what they're talking about. So it's becoming, I think
realistically, we had shot ourselves in the foot a little bit, and this is mostly my fault. But we had gone so far in the other direction that we had trained people the minute they had any question, they should submit a support ticket. And as a result, we were getting tons of support tickets that were very basic prompts, because people just, if you give them a crutch, they're going to lean on the crutch. And now just by sort of forcing them to ask the question and see if basic queries can be answered, some percentage can, and the hard stuff gets through to us, and we give them the personal support we've always done.
There you go. Triaging at work. That's important. Well, okay, let's move on to the next rapid fire. Actually ended up being a little longer than rapid fire. I have no problem with that. So the next question we ask is about processes and methods. So what system or process do you think every lean leverage first team should have in place by the time they hit their first $1 million in revenue? I think that separates the ones who are truly getting scale, like the ones where you put in an hour of effort and you get 10 hours of return. that separates them from the grinders, where they spend all this time and effort to get to the first million. You're going to spend twice as much effort to get to the second million. Maybe what's one thing you might tell people to stop doing? I know you already gave some advice about that,
Yeah.
but or maybe something that they should start doing today.
So I'll go in a much different direction on this one. Everyone's going to say some sort of automation or whatnot. For me, it's hiring. So I hear so much from founders and business people bemoaning that hiring is so hard and this, that, and the other thing. And I have a really strong opinion that it's not. I think the difference is people do not put the effort into hiring that they put into sales or product development or these other areas of the business. It's kind of this thing that is done passively. And if you want to drive real efficiency, you need to treat hiring as a, priority 1A. I argue it is the most important thing that you do, because you get the right people on the bus and you just explosion of productivity. So treating it as a first-class priority is my answer.
You got me really thinking here, because if we want to treat them the same, if you want to treat your hiring and employee and team growing, is the way I like to think of it, because we're small teams, right?
Yep.
If you want to treat it like sales and marketing, then if we have an ideal customer profile, we should probably have an ideal employee profile or an ideal teammate profile. And if we don't do anything on sales and marketing that doesn't cater to the ICP, we probably shouldn't be doing anything on the teammate side that's not catering to the ITP or IEP, whatever you want to call it.
Yep, exactly. I think like one of the things that we certainly look for, and you screen for it and you build it into the hiring process, is this employee going to come in and dramatically increase output compared to your normal? Are they going to find ways to be massively scalable human being? And what evidence do we have that they're actually going to do that? That's probably the number one thing we look for at this. There's plenty of super talented people that don't deliver that. They come in and work at a different pace and know how to kind of 10x their output despite their talent. And there's other people that do, and that's something we try to suss out when we hire.
Fantastic. So the last rapid fire question has to do with tips. So if you can give an additional piece of advice to a founder who's running that dinner table size team right now, who wants to scale, but is having this starting problems, because you were in that start phase took a while to get the engine going, but you got there. Maybe what was one of these insights, probably in your blog somewhere, but like one of these insights that sort of got you out of that first just trying to get things off the ground phase, where it's like, oh no, things now really are taking off?
Yeah, I think as it pertains to startups, you need to have honest conversation about what you're actually building and whether there's a market for it. I see this with our customer base is largely early stage startups all the time. And I see this constantly with they've worked on something for 6 months or a year or 3 years, and it's not going where they want it to go. And they are not honestly assessing why that is. I'll give you 2 examples. One is, in case we didn't build anything new and novel, right? We built a CRM and a payment system and an authentication tool. These were very established, known categories of software. So when we looked at why we weren't growing, I have a very high degree of conviction. It wasn't because of what we were building. It was because what we had built wasn't good enough yet. we had to really get each of those tools to the point was competitive with the alternative. I had a lot of faith that once we did that, growth would come. That's why we stuck it out 3 years to a few $1,000s in MRR and decided to keep going. When you look at the evidence in the business at that point, and there's no place to keep going. You just spent 3 years building the $3,000 in MRR. Any objective person would tell you it's nuts, but we knew that there was there. I see so many founders are trying to build something new and they think that they have a growth problem. They think they need more marketing. They think that they need venture capital, where it might be. But the truth is they're just building that people don't want. Like that is the thing that I try to help people suss out when I'm asked these questions. It's like, do you that there is a market for your thing and your product just isn't good enough yet, or you haven't figured out how to market it or whatnot? Or do you fundamentally have a demand problem because you're building something where the just isn't big enough, or there's not a large enough market to support the type of business you're trying to?
Yeah, that's really, and it's hard, I think, for founders, especially if they've put their time and effort and money and their visibility into it, or whatever it is, the reputation. It's hard for people to say maybe I shouldn't be doing that. But you have to sort of disconnect yourself in some ways and look a little less passionate. Because at the end of the day, what's worse, spending time on something that nobody cares about, or the reputational damage of changing your mind, focusing on something else. So I like that.
Exactly.
Well, anyway, this has been fantastic. As mentioned, this is core. This is exactly the kind of interview that is like perfect for this podcast. I really hope folks listen to it. I want you to share it. I want to thank you, Geoff, so much for sharing your time, your insights, and just all this support you're providing to this network, and proof that this way of building a business actually does work.
I like to think so. It's been a fun challenge. As I said, planning to do this for a long time more, and if I can advocate for more companies building small but mighty teams, that's something I love to do. So thanks for me.
Yeah, well, thank you. So for those of you who want to follow up some more, I'm going to provide some links in the show notes. For those listeners who are listening, you could find Geoff Roberts, that's Geoff Roberts, on Twitter and in Blue Sky at Geoff Roberts, actually at Geoff T. Roberts, Twitter/X, on Blue Sky at geoffroberts.bsky.social. You could find him on LinkedIn as well. Definitely go to the website. You can find out about the product, but also about all these blog posts. So if you go to Outseta, that's outseta.com, definitely take a look at the posts, the equal compensation model, the payment structure model, the growth by elimination article, the 7-year updates, the 9-year updates, the SaaS operating agreements. All that stuff is there. It's public. It's transparent. You heard it. You heard why. And I want you to subscribe to this podcast if you're not already, and forward this podcast for those founders who are listening, who are doubting whether or not you can truly build a small team that scales, that serves over 1,000 businesses with over 7 figures of revenue. This podcast is the proof. So I want you to think big, stay lean, and scale smarter. Small teams that scale big aren't the future, they're the now. If this episode has you inspired to learn more, hit that subscribe button, share it with your crew, and join the movement over at scalebrate.com. That's SCALEBRATE.com. Until next time, think big, stay lean, and scale smarter, because small teams have mega potential. And thanks for tuning in to the Small Team, Big Scale podcast.